Very good evening, my dear future chartered accountants. I hope you all are doing great and your revision is going wonderful. All right. So, with this, in the last session, we had discussed chapter 7, and today we will be starting with chapter 8. Okay. Audit report. Why is this chapter important from exam point of view? First, let me tell you that because how is reporting done, what are the types of report, what are the responsibilities of auditor, what are the responsibilities of management, what are the responsibilities of joint auditors. So lot many essays discussed in this chapter along with concepts of like kinds of report, when is what kind of report is required to be given by an auditor. All right, so you should be having conceptual clarity regarding what type of report when to be submitted and also the remaining contents we will be discussing today. So we will be taking up again in a question answer form this chapter, and I request you all, if you have any doubt, please ask immediately, or if you wish to ask after we complete with the question and answer and just before the class gets over, it is also perfectly fine. All right, so let's start without wasting time now. So begin with question number 1. The auditor's report shall include a section with the heading Responsibilities of Management for the Financial Statements. Okay. Essay 200 explain the premise relating to responsibilities of management and where appropriate TCWG on which an audit in accordance with essay is conducted. Explain. Now, what have you to explain in this question? You have to first tell that what is the premise, okay, and how does the auditor's report describe the management's responsibility. All right, so two parts to it. So let's start. Responsibilities for financial statements. The auditor's report shall include a section with the heading Responsibilities of Management for the Financial Statements. I hope you remember the format of the audit report. Okay, the heading, that's the title, and then followed by the responsibility of addressee, responsibility of management, responsibility of auditors. So here a question specifically from responsibility of management coming up. Okay, so essay 200 explain the premise, the basis, okay, relating to responsibilities of management and where appropriate TCWG on which an audit in accordance with essay is conducted. Management and where appropriate TCWG, they accept the responsibility regarding what? Regarding number 1, preparation of financial statements, and also accept responsibility for such internal control. All right, so preparation of financial statement and responsibility for implementing the internal control, as it determines is necessary to enable the preparation of financial statements that are free from material misstatement, whether due to fraud or error. The description of management's responsibility in the auditor's report include reference to both responsibilities, as it help to explain the user of premise on which the audit is conducted. Okay, so here coming to the responsibility of management as described in the auditor's report. So what were the responsibilities? Number 1, preparation of financial statements as per applicable financial reporting framework, plus the design, implementation and maintenance of internal control. This is the crux. Okay, now how are you going to elaborate? Students, I am telling you the crux. Why? Because this is what you should be remembering, that what is the responsibility. Number 1 pointer, preparation of financial statement, which is the most primary objective, isn't it? Preparation of financial statement as per applicable financial reporting framework along with the design, implementation and maintenance of internal control. Then another responsibility regarding the going concern, whether the firm, the entity has used the going concern basis of accounting or not, isn't it? And if not, then the disclosure for the same, isn't it? So do you all remember all that point? So this crux should be very clear in your mind so that you can elaborate on this point. This is the whole idea when you study the chapter, and you make points, you make crux, you make little points, so that for you to remember, and then you have to explain in your own words those very point using the keywords, isn't it? Okay, so let's see how the answer is written. Preparing the financial statement in accordance with the applicable financial reporting framework and for such internal control as the management determines is necessary to enable the preparation of financial statements that are free from material misstatement, whether due to fraud or error. All right. Then it says, and also management's acknowledgement regarding the responsibility of DIM, that is design, implementation and maintenance of internal control to prevent and detect fraud. All right. Next, assessing the entity's ability to continue as a going concern and whether the use of going concern basis of accounting is appropriate as well as disclosing. Okay. If applicable, matters relating to going concern. The explanation of management's responsibility for this assessment shall include a description of when the use of going concern basis of accounting is appropriate. Okay, so whatever answer is given here in this screen is for you to also elaborate, but you can shorten up this answer keeping in mind the keywords and explaining in your words. Is it clear to everyone? Anyone, any doubt? Uh, Shobha, Saubhagya is asking, ma'am, please, the WhatsApp group link. Technical team, can you help them with the WhatsApp group link? Yes, thank you. So I hope this is clear to you that what was the question demanding. The question was telling the premise, was asking for the premise as well as the management's responsibility. Okay, so the premise was preparation of financial statement and also accepting the responsibility of internal control, and then the responsibility coming forward with the preparation of financial statements as per applicable financial reporting framework, along with design, implementation and maintenance of internal control, and also whether the entity's ability to continue as a going concern and disclosure for the same. Is this clear to everyone? Is it clear to everyone? Should we proceed? All right, coming to the next question. SKN Limited, a biopharma company and global manufacturers of select critical care medical products, has been sanctioned working capital limit of 5.99 CR. Now, immediately when working capital limit is coming, you should be quick enough to understand that working capital limit is sanctioned on the basis of your inventory and debtors. So, immediately, debtors or inventory. So, they will be asking about the audit procedures or some reporting requirement. Okay, proceed. From the nationalized bank on the basis of security of current assets. See, during the year under audit, the statutory order of SKN Limited considers that inventory is material to the financial statements and performs audit procedures over the company's final inventory record to determine whether they accurately reflect actual inventory count and without any major discrepancy of each class of inventory. What are the reporting requirements regarding physical verification of inventory under CARO 2020? Okay, so 2T for 2, isn't it? You remember this trick of remembering? 2 was for your inventory, isn't it? Do you remember it? Okay, so you should be quick to recollect clause number 2 of para 3 of CARO 2020, isn't it? So you will start writing. Immediately tell the examiner this, yes, I remember the clause number very well. Okay. So that is the first impression that you are giving to the examiner, that you remember the clause. And writing, you will start writing the answer as per clause 2 of para 3 of CARO 2020. Nothing less than this. Okay, promise me, nothing less than this. No, just clause 2, no para 2, clause 2, nothing of that sort. Immediate, like as it is, this is to be quoted. as per clause 2 of para 3 of Caro 2020. That's it. This is what you have to write. Okay. The auditor is required to report in respect of physical verification of inventory and in respect of sanctioned working capital. Does any one of you remember what was regarding the inventory? We had physical verification of inventory on regular interval of time. Then if the discrepancy is more than 10%, it had to be properly dealt with in the books of accounts. And also if the working capital limit was more than 5 CR, then the quarterly returns to be filed by the company with the bank in such cases. Isn't it? Do you all remember this basic things from your clause 2? See, it should be there in your fingertips since it is your revisionary class. I expect you all to remember this much. Alright, okay, let's see how the answer is written. As per clause 2 of para 3 of Caro 2020, the auditor is required to report in respect of physical inventory. What is number 1? Whether physical verification of inventory has been done at reasonable interval by the management, isn't it? Whether in the opinion of auditor, the coverage and procedure of such inventory by the management is appropriate. Okay. So, regular and appropriate. Inventory, physical verification of inventory, regular and appropriate. And whether any discrepancy of 10% of more in the aggregate of each class of inventory. Class you understand now? Were noticed? If so, whether they have been properly dealt in the books of accounts or not. So, very simple. What have you to remember? Physical verification done regularly and appropriate. Discrepancy more than 10%. You have to see whether dealt in the books of accounts properly or not. Next, whether during any point of year the company has been sanctioned working capital in excess of 5 CR. Okay, then you have to remember why? Because then the inventory audit, the stock audit is mandatory. Okay. So, in aggregate from bank or financial institution on the basis of security of current assets, whether the quarterly return or statements filed by the company with such banks or financial statements are in agreement with the books of accounts of the company, and if not, you have to give details. So, physical verification, regular and appropriate, discrepancy more than 10% dealt with in the books of accounts properly or not. Second, working capital in excess of 5 CR, quarterly returns submitted by the company, if not, give details. Easy, isn't it? Alright, it is only easy if you revise it. It is not going to be easy like this for those who are doing it for the first time. Could be Greek, but I just hope that it is not a Greek and it is just settling into your brains more easily. This is what I pray. Anyone any doubt? Anyone any doubt? Can we proceed? All right. Okay. Jaspreet is here, Sumedh is here, Gayatri is here. Why are you not, is it clear to everyone? Jaspreet, is it clear? Okay, Sumedh is asking, man, can explain 2 points. Sumedh, do you wish to ask these 2 points? Sumedh, should I explain it again? All right. I'm explaining it again, Sumedh. Please pay attention. It is asking regarding the second point. Okay. Second point is whether during any point of that point of time of the year, the company has been sanctioned, means even any day of the year, if it has been sanctioned rupees 5 CR more than rupees 5 CR. Okay, in excess of 5 CR means more than 5 CR, then whether a quarterly return or statement by that entity is submitted with the bank or not. Okay, and that statement which is submitted, is it as per the books of accounts, or books of accounts is showing an inventory of rupees 5 CR, but with the bank they have submitted 10 CR, because on the basis of these inventory only you are getting the sanction limit, isn't it? And if there is a discrepancy, or if the bank has if the company has not explained Then you have, the company has not submitted the quarterly statement, then you have to give the details. Okay. All right, Jaspreet. Sumed, is it okay now? Sumed, I want the answer from you. Is it clear, beta? Okay. All right. Coming to the next question. Caro 2020 shall apply to every company, including the foreign company. Now you know. Caro applicable to which company and what were the exceptions. However, it specifically exempts certain class of companies. State which class of companies are specifically exempt from applicability of Caro 2020. Such a direct question, easy question. Just imagine if this question comes in the exam. It is a freebie, isn't it? Isn't it a freebie? Huh? 3, 4, 5 marker question coming for free. Exactly. You snatch those 5 marks from ICAI, isn't it? Such direct question. All right. So Caro 2020 shall apply to every company. See, I know that you all know the answer. You all know the content. But how it is to be written, how it is to be presented, that is what you are learning in your LVRC. Okay, you see whatever screen is there in front of you, try to pay attention to the screen. Okay, this is how the answer is written. You write a little introduction and then you write the points, leave a line before every points. Okay, so this is what that makes your answer presentable. Underline the important points that you feel. It is not that you are important in underlining anything. No, the key terminologies. Okay, all right. Okay, so let's see. They say it is applicable to every company except, what are the exceptions? I told you how to remember. Banking company, insurance company, section 8 company, one person company and a small company as defined under clause 85 of section 2, private company, which is not a subsidiary or holding of a public company, having a paid up capital and reserves in surplus of not more than 1 CR as on the balance sheet date, does not have total borrowing exceeding 1 rupees 1 CR from bank or financial institution at any point of time during the year, means not for a single day also, isn't it? And which does not have a total revenue, means revenue not more than 10 CR. So, you know the exceptions. Banking, insurance, section 8, small company, one person company and private limited company where paid up share capital and reserve not more than 1 CR, borrowings at any time during the year not more than 1 CR, revenue not more than 10 CR. Easy question. Understood by all? Reply to me in the chat box, dear students. Your participation is very, very important to keep the fuel in me alive. Yes, it is easy. Right. Okay. See, I want to tell you, dear students, ICI has come up with such great initiatives with regard to your LVC or LVRC or fortnight program or practical approach to your audit techniques. So make use of these opportunities. You know, you are so lucky to have such resources available with you, such teachers available with you so that they are able to explain you practically. So all these measures are taken specially for audit. Why? Because you know how the results go for a toss in case of audit. Rest of the subjects they have scored good, but held up in the exams just because of audit. So make this your strength. Make use of this opportunity. Try to grab it as much as possible. You are being made available with all the BOS material, and also your query. You are open to ask queries to any of the faculties, to even Rajiv sir. So make use of these opportunities, dear students. So whenever this time will go, it will never come back to you. All right, so just think about it and just realize what opportunity you are getting. Okay, All right, in our times, we did not have such facility. So make use of it, isn't it? Okay. So coming to the next question. ASD Limited business has grown from one state of India to various countries of the world. Okay. Since the business has increased manifold, the management decided to appoint joint auditors. As joint auditors come, you remember SA 299, 99 joined together, 99 joined together. So two auditors joined together, two firms joined together, 99 joint auditors. Will you remember this SA number? Come on, reply to me in the in the chat box. 299. Two firms jointly auditing a firm. 99 is joint. Will you remember this technique of remembering? Yes? Okay, all right. So, for conducting the statutory audit of the company, they appointed three CA firms for it. Okay, for which audit work the joint auditors will be jointly and severally responsible. Again, a very direct question. So you are given with some points where the joint auditors are jointly and severally responsible, and for what work they are to be accountable individually, isn't it? So here they are asking for what responsibility are they jointly and severally responsible. Joint auditor of financial statement, write this essay number 299. Never miss this out. Okay? I'm sure we have done the essays so well that you will remember the numbers and names of the essays. Is it so? Is it so? Do you remember? Just write down 5 essays with the name and the number every day, and you see at the end of the your revision you have this entire bunch of essays settled in your brain. Okay, so as per SA 299, joint audit of financial statements, all the joint auditors shall be severally and jointly responsible for what? For the work which is not divided. That is, the audit work which is not divided by the joint auditors and is carried out by the joint auditors. For common audit areas, where decisions taken by all the auditors under audit planning in respect of common audit areas, which is common to all the entities. They say, okay, we are responsible jointly for this. Then if there was some agreement between the firms, okay, among the auditors, that we are going to proceed this way, then matters which are brought to the notice of the joint auditors by one of them, and there is an agreement among the joint auditors on such matters. We had discussed examples regarding this, isn't it? Then examining the financial statements of the entity comply with the requirements of relevant statute. Obviously, the law will remain law for everyone, isn't it? Any firm cannot say, I will not follow this essay. No, essays are applicable to all. They have all to follow the essays. Okay. Then, preparation and presentation of financial statements as per applicable financial reporting framework. The prime responsibility they have to see that whether it is presented or properly or not, isn't it? They can't say, oh, this was your responsibility, why didn't you see? I too audited, keeping into consideration that you must have seen and I have to only audit. No, not that. All the joint auditors have to see to the presentation and disclosure. How is it disclosed? Not preparation, isn't it? Not preparation, it is presentation. How is it presented and how is it disclosed, whether proper disclosure is made or not. Okay, then audit report should be as per the relevant statute. That is, whatever the law demands, whatever the statute demand, the audit report should be as per the statute. So ensuring that the audit report complies with the requirements of the relevant statute, applicable standards on auditing and other relevant pronouncements issued by the ICAI. For example, some guidance notes issued by the ICAI, whether it is followed or not. Okay. Sumedh is asking me to explain the third point. Okay, Sumedh. They say matters which are brought to the notice of the joint auditors by any one of them, and there is an agreement among the joint auditors on such matter. So, may just understand with the help of an example. Suppose A, B, C, there are three firms auditing. Okay, A comes across certain disclosure which is not made. For example, there was some kind of litigation which was going on in the name of the company, but the company did not disclose this. Okay, so now they are asking to mention it in the audit report that the disclosure of the same has not been made. Okay, and according to them, it could be a key audit matter because they have to say that it could be a win or lose situation for them. Okay, so any information which has come to the notice of one and he has informed the others that we are going to mention this in the key audit matter. So for that, each and every firm is jointly and severally responsible. So mate, is it clear to you now? So mate, please write to me in the chat box. Okay, all right. Next question. When the anyone else any doubt in the question with any of the points mentioned here, please let me know. So, work not divided, common audit areas, agreement among the joint auditors for which they have decided commonly. Okay. Then financial statements as per statute, presentation and disclosure of uh, financial statement as per applicable financial reporting framework and audit report as per relevant statute. Anyone any doubt? Please ask. Is it clear to everyone? Okay. All right. Next question. When the auditor modifies the audit opinion, now you all know there are two kinds of report, isn't it? Unmodified and modified. Unmodified, where the auditors say that the financial statements present true and fair view. Okay. And modified, it could be either qualified opinion, adverse opinion, or disclaimer of opinion. When do we say it is qualified? Huh? When the auditor thinks that there could be a material misstatement which could be material but not pervasive, isn't it? Or the other way possible, when the auditor was unable to obtain sufficient and appropriate audit evidence, but still he thinks that this matter could be material but not pervasive. What do you mean by material? What do you mean by material? As per materiality said by the auditor, isn't it? For example, it's a voluminous amount. For example, depending upon the nature and size of the entity, it is material. For example, rupee 1 crore could be material to a business, but for those, for them, 1000 rupees is not material. Okay, a little discrepancy of rupees 1000 is okay for a crores of business. But on the other hand, if there's a little retail outlet which has a turnover of say just 50,000 during the year, annual turnover of 50,000, for them is 1000 material or 5000 material? Yes. So material but not pervasive. What do you mean by pervasive? It is not affecting the balance sheet as a whole. Okay. So that is known as pervasive. So they say it could be material but not pervasive. Adverse, they say that it is, they have to express an adverse opinion when he has obtained sufficient and appropriate audit evidence on the basis of which he concludes that the misstatement is material as well as pervasive. It is material and it is that grave that it will affect the entire balance sheet as a whole. That we give you adverse. Okay, then comes disclaimer. Disclaimer says that the auditor is unable to obtain sufficient and appropriate audit evidence, and the misstatement could be both material and pervasive. So do not get confused when they say he is unable to obtain material sufficient and appropriate audit evidence. If he is unable to obtain, but still he thinks it is both material and pervasive, he will give a disclaimer. But if he thinks he is unable to obtain, but it is material and not pervasive, it will be a qualified opinion. So this could come in an MCQ and you might get confused. So you have to be very, very specific that in case of qualified, it is material but not pervasive. In case of adverse, it is both material and pervasive. And in case of disclaimer, it is both again material and pervasive. But here, he was unable to obtain sufficient and appropriate audit evidence. Whereas in case of adverse, he was able to obtain sufficient and appropriate audit evidence. But on the basis of which he decided that no, this misstatement is both material and pervasive. Did you all understand this point or not? Okay, let's see how the answer is written and then, okay, all right. So, the answer goes like, when the auditor modifies the audit opinion, the auditor shall use the heading qualified opinion, isn't it? Adverse opinion or disclaimer opinion. He writes basis for qualified opinion, basis of disclaimer of opinion, basis of adverse opinion. On what basis has he given that opinion? Okay. The auditor should consider the following while expressing the opinion in accordance with essay 705. What is 705? It talks of modifications to the opinion in the independent auditor's report. Independent auditor's report, and then if there is any modification to it, that means if the auditor has given a qualified opinion, adverse opinion or disclaimer of opinion. Okay. So first discussing about qualified opinion. Students, this question is important and it has been repeated in your these question and answer set 3 times. Okay. All right. So let's check it out. Qualified opinion. The auditor, having obtained sufficient and appropriate audit evidence, concludes that the misstatements are material but not pervasive. For example, the auditor says regarding inventory, he has obtained audit evidence. There is a discrepancy, but it is of a very small amount. It is material, but again, it is not affecting the entire balance sheet. Okay. Then, on the other hand also, this was also a case of qualified when he was unable to obtain sufficient and appropriate audit evidence from a certain debtor. Okay, from a certain debtor, he was asking for external confirmation, but that debtor did not reply. Now, not replied means he was unable to obtain sufficient and appropriate audit evidence, on the basis of which he concludes that the possible effect, why possible effect? Because it could be. It could be or it could not be. So, possible effect on the financial statements of undetected misstatements, if any, again it could be material but not pervasive. So, the entire play of qualified is material hai but not pervasive. It is material but not pervasive. Whether he was able to obtain sufficient and appropriate audit evidence or he was unable to obtain sufficient and appropriate audit evidence. Is this qualified opinion clear to all of you? Please write to me in the chat box. Write to me in the chat box. Is this clear? Others also. Jaspreet, I know you have studied from me. Others also, please reply. Gayatri also was in my class, isn't it? So May I'm seeing for the first time. All right. Okay. All right. Then comes the adverse opinion. What is adverse? He's saying that hopeless. The auditor shall express an adverse opinion when the auditor, having obtained sufficient appropriate audit evidence, concludes that misstatement individually or in aggregate are both material and pervasive to financial statements. It is going to ruin the balance sheet as a whole. Okay. So, hopeless case, adverse opinion, where he has obtained sufficient and appropriate audit evidence, and based on those evidence he says the financial statements are not true and fair. The misstatements individually or in aggregate are material and as well as pervasive. Clear? Have you understood this adverse opinion? Okay, coming to the last, disclaimer. Disclaimer simply says that the auditor shall disclaim an opinion when he is unable to, he has tried his best. He has he tried to obtain some evidence, he could not. He applied other audit procedures, he was not. He applied additional audit procedures, he was not able to again. Now he's saying that, oh my god, I'm not able to get sufficient and appropriate audit evidence. But this matter, it is material as well as pervasive. So I have to disclaim that I am unable to obtain sufficient and appropriate audit evidence, and the possible effects of these misstatements on financial statements are both, or could be both, material and pervasive. Again, he could be wrong. They're saying could be, but again, he is of the opinion that it could be material and pervasive. Are you all understanding this? So you might get a case study, okay, like Mr. X, while conducting the audit of ABC Limited, he obtained sufficient and appropriate audit evidence, but the misstatements were pervasive as well as material. What kind of opinion should Mr. X give? Come on, write to me in the chat box. Others also please write to me in the chat box. Small question in the form of your, sorry, but from this question you do not get, from this chapter you do not get MCQs. From this chapter you do not get MCQs. You know that or not? You know that or not? But your understanding of the chapter should be very crystal clear. You get a question, case study form of question, okay, and they're asking what kind of opinion. You first tell, depending upon the marks, you tell these are the kind of uh, modified opinion, adverse, qualified and disclaimer, and this particular deals with adverse opinion. Why? Because he obtained the sufficient and appropriate audit evidence, but based on those evidence he concluded that the possible effects of misstatement could be both material and pervasive. Is it clear to all of you? Gayatri, my question was, during the audit of XYZ, during the audit, Mr. X was conducting an audit of entity ABC and company, okay, and then he obtained sufficient and appropriate audit evidence, on the basis of which he concludes that the effects of misstatement were both material and pervasive. What kind of opinion should Mr. X give in his audit report? Gayatri, yes, adverse opinion. Okay, all right. Should we come to the next question? Are you all ready? Okay. During the audit of limited company as statutory auditor, you discovered a fraud. Now, as soon as the word fraud comes, you should be quick to jot down clause number 11 along with section 143 subsection 12 of the Companies Act. Are you remembering these two things? I told you while doing the class also. Clause 11 and section 143(12) of the Companies Act. Isn't it? Why? Because section 143 subsection 12 deals with the situation of fraud. Isn't it? And there the auditor has to file the form ADT 4. ADT 4 was the form. Do you all remember this? So immediately fraud right there in your book. Clause 11, 143(12) and ADT 4. These are the things you should be coming to your mind immediately as soon as you come across the word for fraud. And again, Companies Auditors Report Karo coming, Company Audit Report 2020 coming into play. Very, very important. Clause 11, Section 143(12) and ADT 4. Rest of the things will follow, but these three things should quickly come to your mind. Your preparation should be such. All right, okay. So they say, what are the reporting requirements regarding fraud under the Company's Auditors Report Order 2020? Easy question. Reporting requirements of fraud under CARO 2020. The auditor is required to report the fraud under clause 11 of para 3 of CARO 2020, isn't it? Firstly, he will say whether any fraud by the company or any fraud on the company has been noticed or reported during the year? If yes, the nature and amount involved. This is what we had studied. Reporting under CARO for clause 11. Whether fraud done? If yes, nature and amount. Then whether any report under subsection 12 or section 143 of the Companies Act has been filed by the auditors in form ADT 4 as prescribed under Rule 13 of the Companies Act. Even if you don't write the rule, it is perfectly fine. What you have to remember, section 143 subsection 12 and form ADT 4 with the central government. Okay. Then whether the auditor has considered whistleblower complaints, if any, received during the year by the company. What was whistleblower's complaint? When he's coming to get to know about the fraud done by the company or on the company through some another source, isn't it? Some person within the entity is complaining about the fraud to the auditor without coming into picture. Isn't it? Do you all remember these things? So this question under fraud, you have to remember clause 11, section 143.12, ADT 4 and whistleblower. Clear to everyone? Sumedh, is it clear? Okay. All right. Coming to the next question. Pure Services Limited is into litigation relating to some legal action initiated by the industry regulator. Okay. The matter has reached Judicial High Court. Keeping in view uncertainty relating to the future outcome of matter, the statutory auditor of a company has decided to include this in the EOM, emphasis of matter paragraph in the auditor report. Briefly discuss the considerations to be taken care by the statutory auditor when EOM matter is included in the auditor's report. Number one, also state two examples of circumstances where auditor may consider it necessary to include EOM matter paragraph. Now you have to first know, when does an auditor give an emphasis on matter paragraph? Very, very important for you. When does an auditor give an emphasis of matter paragraph? When something which is there in the financial statements is present there, it is there in the financial statement and it is disclosed there. Do you know this or not? Do you know this or not? When is an emphasis of matter? The auditor is just trying to emphasize on this matter. When it is there in the financial statement, it is somewhere there, presented and disclosed, but the auditor is trying to emphasize. See, it is there in note number this. It is there in note number so and so, in annexure so and we are trying to emphasize on this matter, because this matter is relevant to the users of financial statements, and maybe just going through the financial statements, they might skip this information. So we are emphasizing on the same. We are telling our users, we are announcing it to them that this is the matter to be emphasized upon. Isn't it? So it is not something which is not presented or disclosed in the financial statement. It is with respect to matter which is there in the financial statement. Okay. All right. So when the auditor includes EOM para in the auditor report, he shall. First of all, we had done that there is a separate section. There is a separate paragraph or emphasis of matter paragraph, isn't it? Like key audit matters, we also have emphasis of matter. So separate section like your title, addressee, responsibility of management, responsibility of auditor. Again, another heading is emphasis of matter, isn't it? In this matter, you emphasize on matter which is in this paragraph, you emphasize on matter which is presented and disclosed. And you also tell that your opinion is not modified on the said matter. There is just one audit report. And just because of this emphasis of matter paragraph, it doesn't mean that you are qualifying your opinion or you are modifying your opinion. This is very, very important that you should remember. Is this clear to all of you? We will do the answer, but basic points you should be knowing. Basic, when does emphasis of matter come? When it is, when some information is there, presented, disclosed in the financial statement. Separate section is there, and the auditor mentions that his opinion is not modified on the said matter. Just because he has given emphasis of matter doesn't mean that he's qualifying the report. He's just emphasizes on the matter. Clear to all of you? Okay, now let's see how does the answer goes. When the auditor includes EOM para in the auditor's report, the auditor shall include a para with a separate section of the auditor's report with an appropriate heading. What should be the heading? Emphasis of matter. This should be in the double quotations, inverted commas. Okay. Include in the para a clear reference to the matter being emphasizes, means a clear reference. Where is this matter located? And to where relevant disclosures that fully describe the matter can be found in the financial statements. Like you have in your newspaper, this news continued in page number this, isn't it? There's a reference given. So likewise, your main auditor, independent auditor's report, it will give the reference of what the matter exactly is, where is the matter exactly in that emphasis of matter paragraph. Okay, the paragraph shall refer only to information presented or disclosed in the financial statement. It does not deal with any information which is not disclosed in the financial statement. Okay, then he shall indicate that auditor's opinion is not modified in respect of matter being emphasized. Okay, this was part number 1 of the question, where they say what consideration should be kept in mind by the statutory auditor with respect to EOM para. So number 1, separate section with a separate heading, emphasis of matter. Next, emphasis of matter is given for things which are presented and disclosed, for matter presented and disclosed. And also he will disclose, the auditor will disclose the fact that his opinion is not modified. Number 1. Now what happens when you write the answer? You know the answer, very happily you are writing all the 3 points, and then you skip the second part. This is what happens. You forgot to write the second part of the question. The second part says, give 2 examples of the circumstances where the author may consider it necessary to include such kind of para. This you skipped. Why? Because you were so happy you knew the answer that 1, 2, 3 you wrote all. Finish. Out of 5 marks, how much are you getting? 1.5 or 2. And then you come up, ma'am, I don't know why ICAI deduct marks. I wrote everything correctly. You wrote, but you wrote half. When you write the full answer, then too you do not get full marks. Then how come you expect to write half answer and get full marks? Cannot expect, isn't it? Okay. So read the question very properly, and this is why I always tell you, when you finish, the paper is designed in such a way that you have 5 to 10 minutes for revision depending upon individual speed. It's designed. You cannot say the paper is lengthy. It becomes lengthy because you ponder, you think. That is not the time to think. That is a point where you recall, fat, yaad aa raha hai, you write, because everything is there in your mnemonics, everything is there in your points. You just recollect and you write. You just expand there. So this and that too, expansion not on the day of examination. You have to try expanding and explaining in your own words much before the examination. ICAI conducts mock papers for you. Sit on those in those mock papers. Appear in those mock papers. See that examination environment, how it is created. Try to focus 3 hours on that paper. Try to write. Okay, time yourself. Time yourself in the house itself, in your home itself. Just put a timer that in 3 hours I have to attend this question. If not 3 hours, mark 15 minutes for this question I will dedicate. Because this habit, this practice of writing should be there. If you do not practice, you will not be able to complete the paper on time. Okay. So, and this much time is given for you, 5 to 10 minutes, that you revise. Please see. And always start a question, a new question from a fresh page. No matter what, you have written a single line on the other page. No matter, you have just consumed 3 to 4 lines of the next page. Leave that. Come start a fresh question from a fresh page. Why am I saying that? Because while revising, you come across that you have skipped another question, another part of the question. You have space to write. You have space to write. Even if you are not left with space and you mention there below that first point, that point number 2, done after this question. Examiners are courteous enough and they will definitely see to that answer. Do not worry about that. But at the very first point, you should be very careful. Okay, so how can you prevent from making such a mistake? First of all, read the question properly. When you have finished writing the question, see that you have attempted the question fully. Then, while revising, see that you have done all the parts. Okay, and then you have left a space if not. All right, okay. So, second part, what are the examples where such EOM paragraph can be given? There is any uncertainty relating to future outcome of exceptional litigation. Like in this case, you never know whether they are going to win, whether they are going to lose. So, you are emphasizing. Significant subsequent event occurred between the date of financial statement and the date of audit report. Subsequent events, SA 560. Then, early application of new accounting standard that has made material on the financial statement. Material effect on the financial statement means there is some kind of essay that you have used a new standard when 30, 31, 32 came, financial instruments came. Very first time you have introduced. So you are mentioning it that yes, they have used this standard. Okay. Then major catastrophe that has occurred or continues to have a significant effect on the entity's financial position. Some kind of situation, some kind of circumstances, some kind of financial disbalance that has occurred and which you think will affect the entity's financial position. So you're emphasizing. Okay. It is not that it has an effect on going concern. Okay. It doesn't mean. But you are emphasizing it. Okay. Is it clear? Okay. All right. I'm getting some query. Just a minute. Let me go through it. Ma'am, does abnormal loss or loss of fire is an example of major catastrophe? Yes, Sumedh, you can say any sudden disaster which is having or causing suffering or damage, any kind of damage to the business financially is. So even a fire could be a major catastrophe. Is it clear, Sumedh? Sumedh, is it clear to you now? Any damage or suffering? Okay. All right. So yes, it could be there. Okay. So is this question clear to all of you? Are the examples clear to all of you? Okay, let's proceed to the next question. Section 143(1) of the Companies Act 2013 states that every auditor of a company shall have access to books of accounts and vouchers of the company and shall be entitled to require from officers or company such information and explanation and as considered necessary and shall inquire into certain matters. State those matters to be inquired. There is a list of pointers which we have made, the 6 pointers question we have done, and you should be quick enough to recall section 143. 143, books of accounts, loans and advances, book entries, deposits, personal expenses charged as revenue, whether for the securities issued, cash received or not, securities issued where it has been sold at a price less than the cost price. So all these things should immediately come to your mind. That should be the kind of revision you are going to do. Okay, promise me. Promise me, if you do this now, you will not face any difficulty in revising the content a day before examination. You know what happens? Students are not able to revise the entire content a day before exam because they have not made notes, they have not made their bullet points, they have not made the crux, they have not put on sticky notes, post-its, uh, you know, where small contents are written, they have squeezed in the matter. So all these things has to be done much prior to the exam. Okay, so let's see how is the answer going. Very straightforward question again. To the point you write, to the point you get the marks. Okay, ask for 3-4 marks. Try to write 5 to 6 points. Try to write 5 points. At least for 3 markers, try to write 5 points. Okay. All right. So section 143(1) of the Companies Act 2030, auditor shall inquire. Okay. Inquire regarding what? This section is regarding inquiry of, isn't it? That whether any loans and advances have been made by the company, and if made, they are properly secured and are not prejudicial to the interest of the company, isn't it? So how does they write? They write whether loans and advances made by the company on the basis of security have been properly secured, and whether the terms on which they have been made are not prejudicial to the interest of the company or its members. Means it is not going against the interest of the company, isn't it? Okay. Second things, whether transaction of a company which represented merely by book entries are prejudicial to the interest of the company. Are there any entries or transactions which are there in the books of accounts, are they prejudicial to the interest of the company or not? Then where the company has where the company not being an investment company or a banking company, and as much of the assets of the company as consist of shares, debentures or securities have been sold at a price less than which they were purchased. So the selling price of these securities are less than the cost price when these company are not the investment company or banking company. So you have to inquire. These matters are to be reported only if you find any discrepancy. This is the real difference between section 143(1) and your CARO. CARO, you have to report. CARO, there is a set format. You have to report whether or not. You will say, yes, physical inventory done. Investment, loan advances not made. But you have to mention here, you inquire. If these discrepancies are found, then only you report. Okay, otherwise you do not report. Then, whether loans and advances made by the company have been shown and deposits or not, or they have not been shown. If not, if shown, leave it, no issue. If not shown, you have to disclose. Okay. Then, whether any personal expenses of the people working within the entity, whether they have charged it to revenue account. Means their personal expenses, they are debiting into PL. This is what it means to say. Why debiting to PL? That will reduce the profit, less tax. So this is being done. Will the financial statement present true and fair view? No. The profit will be understated. The expenses will be overstated. So this is what you have to check. Okay. Where it is stated in the books and documents of the company that any shares have been allotted for cash, whether cash has been actually received in respect of such allotment, and if no cash is actually received, whether the position stated in the books and balance is correct, regular and not misleading. So you have to see if any shares have been allotted to cash, whether cash received. If not received, it should be properly disclosed. Clear? Clear to all of you? So how will you remember? Loans and advances, book entries, securities sold at less than the cost price, whether loans and advances shown as deposits, whether there are any personal expenses charged to revenue expenses, and if the securities are issued for cash, whether cash has been received or not. If not, the books of accounts should state the position. Clear to all of you? Anyone, any doubt? Anyone, any doubt? Okay. Next question. PQR and Associates and MNO Company, both firms of the chartered accountants, have been appointed as joint auditors of Gamma and Beta Limited. Before the commencement of audit, the joint auditors should discuss and develop a joint audit plan. In developing the joint audit plan, the joint auditor should identify division of audit area and common audit areas. Now see, that question was regarding what responsibilities are they accountable or responsible severally and jointly. This question is telling you that there are certain areas which is to be first divided, and there are certain area which is a common audit area which is common for all. Explain stating the other relevant consideration in this regard with reference to standards on auditing. So you have to mention that SA 299 deals with joint auditors of financial statement, and you have to tell before the commencement. See, what is the question asking? It is saying before the commencement, the joint auditor should take into consideration what things? They should identify which work is to be divided and which is to be taken in common. So, identify division of audit areas and common audit areas. First, you identify. Then you ascertain the reporting objective. What is the reporting objective of the engagement? Where have is to be reported? What kind of report is to be issued? Then consider and communicate among all joint auditors the factors that are significant in directing the engagement team's effort. You have to tell your engagement team that, see, we are working jointly. These matter taken up by them, but still, if anything come to your knowledge, you should communicate. Okay. Consider the results of preliminary engagement activity. What is preliminary engagement activity? That is taken up even before starting the audit. Some kind of due diligence that you do. Isn't it? You do due diligence, you try to gather information about the company, or similar engagements which is performed earlier than the initiation or conduct of your audit. Okay. Then ascertain the nature, time and extent of resources necessary to accomplish the engagement. For example, A, B, C are three auditors, and today is what, 7, and they decide that they have to complete the audit by 2nd of September. Okay, big entity, that is why 2 3 auditors are appointed. So it is not that A has done and B is still doing, C has not yet started. No, they are deciding that yes, this is the nature of work we are doing, this is the extent of work that each firm is doing, and this is the timing. When are we going to do? They will do in the middle, we are going to do at the end, they are going to do like this, and we are going to complete it together like that. Isn't it? So, number one, identify what work is to be divided and what is to be taken in common. Ascertain the reporting objectives. Consider and communicating among the joint auditors. Consider the results of primary engagement activity and ascertain the NTE, that is nature, timing and extent of resources necessary. Easy? Will you remember? Repeat with me. Identify division, ascertain the reporting objective, consider communicating among joint auditors, consider the results of preliminary engagement, and ascertain the NTE, that is nature, timing and extent of the resources. How many people are required, by what time will be able to complete it. Clear to all of you? Read this question once again. Read this question once again on your own. Okay, read this question once again. There is a difference. You might get confused between the first question that we did for joint audit and this question. Okay, Jaspreet, you have done. Let others also see to the question. Okay. Sumedh, you also done? Were you able to understand this question, Sumedh? Okay. Coming to the next question. Okay, you will tell me. All right. Mr. Chetan is appointed as the statutory auditor of Spot Limited, which is a small company. Mr. Chetan is aware that Caro 2020 is not applicable to small company. List out the classes of companies that are specifically exempt from the applicability of Caro 2020. Let me see who can answer this question. Let me see who can answer this question. Very good, Gayatri. One more point. Gayatri, one more important point. Not just this, you have to write in full. Private company which is not a holding or subsidiary, which is neither holding nor subsidiary. And also you have to mention the turnover, the borrowings, the total revenues. See, you just can't write private company. If you write private company, it is going to be wrong. You have to tell private company which is not a subsidiary or holding of a public company, having a paid up capital and reserve not more than 1 cr, borrowings in any part in any time of the year not exceeding rupees 1 cr, and then total revenue as disclosed in schedule 3 not exceeding rupees 10 cr. Why you cannot write everything, Gayatri? You all are so good at typing. You type on your mobile. Okay. All right. You're using a tab. Okay. It's okay. The whole idea of asking was that you remember, and I'm glad that you all remember, because why? This question we have just done. So, see, this is how they have written: banking, insurance, Section 8 companies, one person and small company, private company. Okay. Private company, which is neither a holding nor subsidiary of a public company, paid up capital and reserves not more than 1 CR as on the balance sheet date, borrowings not exceeding 1 CR on any day of the financial year, and then turnover as per schedule 3 not more than 10 CR during the financial year. Okay. All right. Then let's see question number 11. Auditors do not always issue an unmodified opinion on financial statement. In cases where there are material misstatement or limitation in obtaining sufficient audit appropriate audit evidence, a modified opinion may be necessary. Discuss the types of modified audit opinion an auditor can issue. Number 1, again, second part of the question. Explain how this opinion differ based on the concepts of materiality and pervasiveness. Who will answer this question? Very good, Jaspreet. Also write when do we issue qualified, adverse or disclaimer. Short, in short you can write. Let me see. We have just discussed this question, so I expect you to answer. I'm waiting for your reply, dear students. All right. So there are three types of report: qualified, adverse, and opinion. Again, qualified, you will say having obtained sufficient and appropriate audit evidence, but misstatement is material but not pervasive. He was unable to obtain sufficient and appropriate audit evidence, but still he thinks that the possible effect could be material but not pervasive. And again, in case of adverse, having obtained sufficient and appropriate audit evidence, he concludes that the misstatement is material and pervasive. Disclaimer: he was unable to obtain sufficient and appropriate audit evidence, but still he concludes that the possible effect of misstatement could be material and pervasive. And you see how they have written, because they were asking in the question that can an auditor in what circumstances this having not able to obtain sufficient and appropriate or limitation in obtaining sufficient and appropriate audit evidence. That is why you see additional paragraph regarding the disclaimer of opinion is given. This is the point to be noted. Just pay attention here. The audit shall disclaim an opinion in extremely rare circumstances involving multiple uncertainties. The auditor concludes that notwithstanding having obtained sufficient and appropriate audit evidence regarding each of the individual uncertainties, it is possible to form an opinion on the financial statement due to possible potential interaction of the uncertainties and their possible cumulative effect on the financial statement. What does that mean? It means that any misstatement, which could be either individually or in aggregate, is material and also pervasive to an extent that it is affecting the balance sheet as a whole. Is it clear to all of you? So they say very rare, but still he can issue disclaimer when he thinks that it has a cumulative effect on the balance sheet or financial statements. Okay, all right. Can we proceed to the next question, dear students? Okay. As per SA 701, 701 is what? What is 701? It is key audit matter. The objective of auditors are to determine key audit matter and having formed an opinion on the financial statements communicate TCWG by describing them in auditor's report. What factors are taken into account by auditor while determining key audit matter? Point number 1. Second question, how the key audit matters are communicated. Again, you have to write what kind of para or reporting or when is it reported. Okay, so first of all, you need to understand when is key audit. What are key audit matters? Key audit matters are matters which, as per professional judgment of the auditor, is of most important matters, are most significant matters, isn't it? They are most significant matters in the auditor's knowledge, and he wishes to communicate these matters to TCWG, isn't it? He communicate those matters to TCWG, isn't it? So these are most significant to audit. These matters are most significant. This is why it is called key audit matter. Okay, so the auditor shall determine from matters communicated out of the entire matter which is communicated to TCWG. These were the key audit matters. These were most significant matters. This is how you remember key audit matters. Okay. So the auditor shall determine from the matters communicated to TCWG those matters that require significant auditor's attention. That requires significant auditor's attention in performing the audit. In making this determination, the auditor shall take into account what will make these key audit matters different from the other matters which are communicated to TCWG. See, suppose there are 12 points, 12 matters, different matters which is communicated to TCWG. Out of those 12 points, auditor say, okay, these 6 I can still leave, but these 6 are very, very significant to me for my audit. Okay, and how will he determine that these are more significant? These are the consideration he will be taken into account. What is it? Areas of higher assessed risk of material misstatement or significant risk identified in accordance with SA 315. What is 315? You identify and assess the risk of material misstatement. How? Through understanding the entity and its environment. So they are saying, oh my God, these matter, they are of high risk assessment. They require higher risk. They are area of higher risk. They demand more attention. They are significant risk. So they say this could be a significant matter. This could be a key audit matter. Second, where he thinks that the management's judgment is not appropriate. The estimation the auditor has made, the management has made, the provisioning the management has made, the provision to bad debts they have made 10%. No, it should be 25 to 50 or could be 40%. So there is a lacking. This accounting standard is not being used properly. Accounting policy is not appropriate. So they say significant auditor's judgment relating to areas in the financial statements that involve significant management judgment including accounting estimates that have been identified as having high estimation uncertainty. The management is saying, we expect that we will win this case, but the auditor finds nothing going in their favor. They are going to lose this case and they will end up paying 5 CR. Now, this 5 CR is a significant matter. They say this is a key audit matter. Are you understanding? Okay. The management thought that they're going to win the case and they have not disclosed this matter in the balance sheet. But he thinks, no, they're going to lose. They will end up paying this huge amount. So it is a key audit matter. It should come into the knowledge of your stakeholders, for your intended users. Okay. Next, the effect on the audit of significant events on transactions that occur during the audit. There could be any significant matters involving foreign exchange transaction, involving voluminous volume of your transactions. So there could be significant events. Okay. The auditor shall determine which of the matters determined as stated above were of most significance in the audit of financial statements of the current period and are therefore the key audit matters. Okay. Now, they say this was the first part of the question. The second part, what did it say? It say how these matters are to be communicated in the audit report. So here comes the second part. The auditor shall describe each key audit matter using an appropriate subheading in the separate section. Like was your emphasis of matter, here the heading is key audit matter. The introductory language in this section of the auditor's report shall state the key audit matters are those matters that, as per auditor's professional knowledge, were of most significance in the audit of financial statement. Number one, he will mention this. Then, what are these matters? These matters were addressed in context of the audit of financial statement as a whole, means they are going to be pervasive. They will affect the financial statement. And informing the auditor's opinion, the auditor does not provide, very important, like there he said in EOM, he said he is not qualifying the opinion, his opinion on the basis of this EOM. Here he is saying that the auditor does not provide a separate opinion on these key audit matter. His opinion remains to be either qualified or adverse or disclaimer or unmodified also. Could be any. But he's saying he is not giving any separate opinion. His opinion is same. One opinion he holds for the entire audit report. But this key audit matter was important for him to mention there. Are you understanding this? There in EOM, he was saying he is not qualifying the matter on this basis. Here he is saying he is not giving a separate opinion on these matters. His opinion remained the same, either qualified or unqualified. But his opinion remained the same. This key audit matter is not affecting or giving a separate opinion. Are you understanding that for the entire balance sheet, for an entire financial statement, he is giving an unmodified opinion. But for this key audit matter, he is giving a qualified opinion. No, that is not possible. All right. Again, this could come in a form of a case study that Mr. X, the auditor, has given an unmodified opinion for the entire audit report except for the matters mentioned in the key audit matters, for which he has given a qualified opinion. Is the contention of auditor correct, or is the approach of auditor correct? No. By mentioning this point, you will first explain and then you will write that the auditor will not provide a separate opinion on these matters, and if he has done so, the approach of the auditor is incorrect or inappropriate. Okay, so is it clear to everyone? Is this question clear to all of you? Okay, can we take a short break of 5 minutes? Can we take a short break of 5 minutes? We will get back at 7:25. Okay. All right. Are we back? Are we back? All right, let's start. So, everything clear till now? Hmm? The question we did on KAM, key audit matters, is it clear to everyone? Okay. We come to the next question, that is question number 13. Okay. Read the question. This question is with regard to your comparative information and corresponding figures. Okay. All right. Just see. The nature of the comparative information that is presented in an entity's financial statement depends upon the requirement of applicable financial reporting framework. There are two different broad approaches to the auditor's reporting responsibility in respect of such comparative information, corresponding figures, and comparative financial statement. Explain clearly the difference between the approaches, stating the essential audit reporting. And also you have to define the comparative information and audit procedures regarding comparative information. So first question, you differentiate between what is corresponding and what is comparative. Okay. Second is specifically on comparative information. So what is corresponding? What is corresponding information? My voice is breaking. Just a minute. Okay, it's clear now. Fine. Okay. So first you have to differentiate between what is corresponding and what. See, read this question, all of you. If my voice was breaking, I apologize for the same. Please go through this question once again. It says number one, you differentiate between comparative information and corresponding. Okay. So what is comparative and what is corresponding? First you have to differentiate. Second question is specifically on comparative information. Second question is specifically on comparative information. So first you will say corresponding figures are figures in which on which the auditor's opinion on financial statement refers to current period only. You know, corresponding, you just there's a vertical line, the schedule 3 format 2026-2025. There is just a reference given of the previous year corresponding figures, isn't it? Schedule 3 format, you all know, current year, previous year. Okay, so you are just comparing the 2 years, but your main prime area of audit is focus on the current period only. You do the audit of current period, you report on the current period. In comparative statement, what do? You give your opinion to each period on the financial statements are presented, means for 25 also and 26 also. This is comparative. You are comparing, you are referring to each period, you are giving your opinion on each period. This is the basic difference, that for corresponding your opinion is restricted to the current financial period only. Okay, but for comparative, for each period, 25 also and 26 also. So this is the basic difference. And then you explain what is comparative information. You define that what is comparative information when your amount and disclosures in the financial statement is respect to one or more periods. This is comparative. How do you define comparative information? The amounts and disclosures which are included in your financial statements are in respect of one or more prior periods, isn't it? This is your definition of comparative information. Now, what audit procedures? So, technically, there are 3 points: definitions and audit procedures also. First is difference, second is definition, and third is your audit approach, your audit procedure. So, what audit procedure do the auditor undertake? The comparative information he has to see, he has to evaluate whether the comparative information agrees with the amount and other disclosures presented in the financial prior period. Whether it agrees. For example, earlier year it was 50,000. This year the expense could be like 60, 55, 60. If it is 1 lakh, There's something wrong. Number one. Second, with regard to the accounting policy. Second is with regard to the accounting policy. That is, it is consistent with that followed in the previous year. For example, you have followed SLM in your WDV for your fixed asset, depreciation of fixed asset. This year also you are following WDV. It is not that you have changed it. And if there are any change, whether it has been properly accounted and adequately presented and disclosed. Properly accounted, adequately presented and disclosed. So, do you get the roadmap? When you read the question, you have to prepare the roadmap. First question, difference. One dealing with the current period, corresponding. Current period, opinion on the current period. Comparative, opinion on each period. Settled. Now, this is what you have to elaborate in your answer. Second point of the question, definition. When the amount and disclosure are respect of one or more prior period. This is the definition. Okay. Third, two procedures. First, that the comparative information, it agrees with amount and disclosure with respect to the prior period, and second is with regard to the accounting principle, whether it is consistent or not. If it is not, then the change is properly accounted, adequately presented and disclosed. Is the roadmap clear to all of you? Please write to me in the chat box. Is the roadmap clear to all of you? Okay. Now you proceed with how the answer is written. See to this question. See to the solution. The nature of comparative information that is presented in an entity's financial statement, it depends on the requirement of AFRF, applicable financial reporting framework. There are two different broad approaches. This is what you are repeating the question. This is what it is mentioned in the question. See the question. See, this is what is mentioned in the question. You are just repeating. What are they? Corresponding and comparative information. The approach to be adopted often specified by law regulation but may also be specified with regard to the term of engagement. Obviously, your engagement will say what are you doing? Comparative figures or corresponding figures. Okay. The essential audit reporting differences between the approaches are: for corresponding figure, the auditor's opinion on the financial statement refers to the current period only. See, simple language. For comparative statement, the auditor's opinion refers to each period for which financial statement are presented. That is 25 and 26. Okay. Definition of comparative information: the amount and disclosure included in the financial statement in respect of one or more prior periods in accordance with applicable financial reporting framework. Then the audit procedures. What are the audit procedures? The auditor shall evaluate with respect to comparative. The auditor shall evaluate that the comparative information agrees with the amount and other disclosure presented in the prior period. Number one. What is number two? The accounting policy reflecting the comparative information are consistent with those applied in the current period. Like I told you, the depreciation policy. Okay. If there is any change in the policy, whether those changes have been properly accounted and adequately disclosed and presented. Is this clear to all of you? Please write to me in the chat box. Is it clear to all of you? See, this is how you have to answer. Read the question, prepare a roadmap, think what is to be written, and then elaborate. It is very easy if you go this way. But obviously, you should be knowing the content. To the point, conceptual question. Very nice question. Isn't it? Okay. Next question. Read the question yourself. It's an easy question. It is with regard to your UDIN. Isn't it? What is UDIN? What is UDIN? The unique document identification number. Gayatri. Gayatri, the question is simply asking regarding the audit procedures. Okay, if the question is asked for 5 marks, see, max to max you are being asked for 5 marks, isn't it? So, this question consists of points. So, you have to take your call. If you wish to write additional audit procedure, it is waste of time. You can write additional procedures, no harm in that. There are 2 extra points mentioned in your study material. I know. If you wish to write, you can write. There is no harm in that. But again, see that so many points asked. So stick to the point. Gayatri, am I clear to you? This is the call you have to take during writing the answer, because you have to see the marking as well as what the question is asked. Like there were 3 points asked. Isn't it? Okay. All right. So Kiran, a CA student, was reviewing an audit report. He's a student, okay? Or she's a student. Reviewing the audit report of the company when she noticed an 18-digit alphanumeric code below the auditor's signature and membership number. She wants to understand the purpose and importance of this randomly generated number as unique code. Is this code required for audit report only? RTP question. Important one. First, they are saying, what is this number? She is unable to understand. So, as an auditor or as a student, you tell her. And is it required only for audit? This is what we have done. Is it required only for audit? No, for all audit reports as well as your certifications, your certificates also, isn't it? So, you all know this. Let's see how are we going to write. We will write the 18-digit alphanumeric code noticed by Kiran at the end of the audit report is nothing but unique document identification number, UDIN. Mention the full form as well as the short form. Now you will tell what is it? It is a system generated unique number. You do not generate it. It is the system which generates it. And it was noticed that why did it come to play? Because it was noticed that non-CAs were into a malpractice of signing the report like that because there was no UDIN. When there was no UDIN, what used to happen? People used to put a fake stamp, fake sign and present it. So even the clients were not aware of whether he's an authentic CA or not. When you go to a CA, you will not ask, first show me your degree. First show me your CA final mark sheet, then only I will come and seek advice. No. So even the clients were being forged. Okay. So this was the scenario going on in the market. So then the institute received lot many complaints regarding this person, that person, and then institute finally came to know that they were not even the members of the institute. They were not members. They were non-CAs. So institute said, how can we protect ourselves? So this is an initiative for that purpose, that this number is generated so that no fake CA, non-CAs can sign. Because if you are a CA, the ICAI will automatically, this portal will generate a UDIN for you. Only if you are a member registered there. Okay. You put your login ID and your password, or your detail will fetch. It will automatically tell you whether you are a firm, whether you are an individual, what is your profile, and then the entire page will come in front of you. Okay. So they say that this was noticed that financial documents or certificates attested by third parties misrepresenting themselves as CA members were misleading authorities and stakeholders. ICAI also received number of complaints of signatures of CA being forged by non-CAs. To curb this malpractice, ICAI implemented the concept of unique document identification number. Chartered accountants who are allotted, who are having full-time COP, certificate of practice, those are into job, they cannot sign, isn't it? So chartered accountants who are into full-time practice can register on UDIN portal and generate this UDIN by registering the certificates attested by them. So the auditor is required to mention UDIN with respect to each audit report signed by him along with membership number. He will also write the membership, because when you will see this 18-digit alphanumeric, in between this your membership number is there. In that, like your PAN number, the fourth alphabet is the how your what is your individuality, or what kind of a person are you? Person, isn't it? Or you are a trust, you are a firm, partnership firm. So likewise, your, if you are a firm, then F will come as the fourth alphabet. If you are a person individual, a P will come in the fourth alphabet place. So this is how you recognize that your membership number will come into play. So your membership number is reflected. So what is there? You will, the UDIN will be generated, you will sign, you will put your membership, you will put your stamp, everything there. Okay. Then it is done not only in audit reports but also in case of certificates. So it is required to be stated in case of audit reports as well as the certificates. Is it clear to all of you, dear students? Others also please reply. Is this question clear to all of you? Okay. Okay. So this 15th is again, you see, qualified adverse and disclaimer. We will, if we have time, we will do it later. It's a repetition. Okay. All right. Next question. TS Limited has raised funds by issuing fully convertible debentures. These funds were raised for expansion and diversification of business. The company had clearly outlined in its board resolution that these funds be used for business expansion and diversification purposes only. However, now you see what happened. The company utilized these funds for repayment of long-term loans and advances rather than for the intended purpose of business growth and expansion. Now, so kind of the question, so kind of you to, so guys, say thank you to the question, because it's being so kind that it has mentioned the para and the clause number. Clause number 10 of the company's auditor's report 20 order 2020. So what is it asking? It is asking you reporting responsibility. Now who will tell me? In clause 10, what was that? Whether the money has been raised by way of IPO or FPO, initial public offer, or or further public offer, you have to see whether it has been used for the purpose intended or not, for the intended purpose or not. If not, then the details together with the delays, default, and if subsequent rectification, if any, was made, has to be reported. What did I say? If the money is raised by way of IPO, FPO, isn't it? And it has to be applied for those very purpose for which it was intended. And if it is not used for that purpose, you have to give the details together with the DDS, delays, default, and subsequent rectification, if any. First point. Second point, if company has made any preferential allotment or private placement, then it has to comply with the requirement of section 42 and 62 of the Companies Act. What was 42? That funds received must be deposited in separate bank account. What was 62? The all the elements of 42. What was 62? That shares have to be first offered to existing shareholders, like your ESOP or your right issue, isn't it? Has to be issued first to the existing, and then you give it to the rest of the public. So you have to see whether sections 42 and 42 and 62 are complied with. Okay. First, funds have been used for the purpose for which they were raised. If not, you give detail with respect of amount involved and nature of non-compliance. What was the amount? For example, it has raised rupees 10 lakhs. So amount involved and nature of non-compliance, for what it was raised and for what it has been used. This is what you have to report, isn't it? So what you have to remember here, clause 10 of para 3 of CARO 2020, that was already mentioned in the question. Suppose it is not mentioned, so you should be knowing clause 10 of para 3 of CARO 2020. Second, money raised by way of IPO, FPO should be used for the purpose. If not used, give details of DDS, delays, default and subsequent rectification if any. Then you have to see where the company has made preferential allotments or private placement, compliance of section 42 and section 62. Okay, and again it has to be used for the intended purpose. If not, you give the details of amount involved and nature of non-compliance. Were you all able to recall these things or not? We have done in detail. Students, were you able to recall? Let's see how the answer goes. Okay. See, the auditor is required to report under clause 10 of para 3 of CARO 2020. What? That money raised by way of initial public offer or further public offer during the year were applied for the purpose for which they were raised. If not, you have to give details of DDS, delay or default and subsequent rectification if any. Clear first point? Second, if the company has made any preferential allotment or private placement of shares or convertible debentures during the year, whether the requirements of section 42, there are list of requirements of section 42 and 62 of the Companies Act, you need not to give the details, you have to just mention section 42 and 62. You should be knowing obviously what section 42 and section 62 is, but for your audit point of view, just mention the section. Have been complied and the funds raised have been used for the purpose for which they were raised. If not, give details in respect of amount involved and nature of non-compliance. Is it clear to all of you? Is it clear, dear students? Write to me in the chat box. Others also, please reply. Okay, next. Read this question and see if you are able to answer. Read this question. Essay 701. Communicating key audit matters in auditor's report deals with the auditor's responsibility to communicate key audit matters in audit report. Explain the definition, what is key audit matter and how the auditor will determine the key audit matter. Means, again, he has to see what are the things that will constitute. Yes, we have already done. So this is the definition, most significant matters. And again, risk areas of higher assessed risk of material misstatement, management's judgment, and effect of audit of significant events or transactions. Same, ditto, replica. Okay. Come to question number 18. Are you all ready? Okay. As per SA 299, joint audit of financial statements. Joint audit basically implies pooling together the resources and expertise of more than one firm of auditors to render an expert job in the given time period, which may be difficult to accomplish acting individually. So they are saying that when obviously when there is something to be made and your mother just divide the work, it is done more, in a less time. And also expertise of things are in people are involved. For example, some guest coming to your home, your mother tells your sister, you prepare the food, you prepare very good food. She tells you, you are good at cleaning the place, you clean the place. Brother, you fetch vegetables and fruits from the market. You are good at roaming about here and there. So what will happen? She will get the best of all the people, and at the same time work will be done at a lesser time, isn't it? So this is what they are saying. See, never read anything out, nothing in the book is out of the box. No concept in audit is out of the box. Everything you relate to your day-to-day life, understand them in simple words, try to reframe them in the correct terminologies and correct audit terminologies rather, I would say. Things are going to be very simple. You see, on you make a Audit, a rocket science, you think it's an audit. Audit is a rocket science. No, it is not a rocket science. This is what you have been doing in your daily routine. We all do audit, isn't it? We come home and see things not in place. That is an audit. That is an audit. Things not in place. It is audit, isn't it? You taste the food and you see whether salt and pepper and all the spices are accurate. It is audit. You're seeing everything is in place. So that is what you are doing in your financial statements. Obviously, you're not tasting the spices, but you are taking the flavors of each and every elements of your balance sheet and your PL for that matter. Isn't it? Okay. So they say explain by stating any five advantages of joint audit. Isn't it? Okay. So what are the advantages of joint audit? Obviously, you share the expertise. The best auditor, see, we are expertising in each and every field. For example, someone is very good at stock audit. You say you do the stock portion. Someone is very good at, see, collecting confirmation from the direct debtors is also an art. Can you seek information from anyone you feel like? No. No, that CA firm, it has a the engagement partner has a bold personality, and immediately he'll be able to seek evidences from people. So you say, okay, for this particular purpose, you do things. So you share the expertise. Then advantage of mutual consultation. Obviously, for common audit area, you discuss things mutually. You see, okay, this is the thing we have come across. We will go on this line. Work overload is lower workload. Obviously, when things are divided, you get a lower workload. Had you been asked to cook food and clean the house and get vegetables, it would be burden on you. Things divided, very well. Better quality of performance. People have got their work of expertise, so they will do their best. It improves service to the client. The service also gets a very good service. The clients also get a very good service because expertise are involved. In respect of multinational companies, the work can be spread using expertise of local firms which are in a better position to deal with detailed work and local laws and regulations. Obviously, when your multinational companies, they are involved, they are not aware of the daily problems or daily way of working of a business in your own place, in your country. So you are at a better position. You know how things can be done from them. So you are helping them. A local auditor is helping MNC. Okay, they are trying to gather information and they are able to get it done. Audit, consolidated audit by MNC. Okay, lower staff development cost. Why? Because low staff is involved. Had you been allotted the entire audit of the company, then what would happen? More staff needed. Your chunks of your staff is taking away your salary, isn't it? So lower cost to carry out work. Obviously, when things are divided, you incur less expenses. Is this question clear to all of you? Write to me in the comment box. Is it clear to all of you? Come on, students, if you don't reply, see, I'm making you read once again. Read it yourself. Advantages, read it yourself and see if you have any doubt in any of the points mentioned here. Okay, clear. Good. Next question. Singh Associates, while carrying out statutory audit of Rubber Industries Limited, observed that debtors are not making payment invoice wise. Okay, as the debtor constitutes 60% of the total assets. So, auditors request the management to provide external confirmation from all debtors outstanding for an amount rupees exceeding rupees 1 lakh. However, management resisted and no external confirmation were made available. auditor firm has decided to disclaim an opinion on the financial statement and seek your guidance on amendments that should be made in the basis for opinion section, that is the basis for opinion paragraph, and elements required by SA 700 which needs to be included in the auditor's report. See, beautiful question. Beautiful, I must say. Yes. In the given, see, read the question once again yourself. All of you read the question. So what is exactly happening? The auditor is asking for debtor's confirmation, but the management is not letting them have that. So they wish to disclaim. How should they go about? Here it is, you have to mention. So in the given situation, since the audit firm has decided to disclaim an opinion on the financial statement, when do you give a disclaimer? When you are unable to obtain sufficient and appropriate audit evidence, but you think that such misstatement would have the effect of being material and pervasive. Very good, very good, very good, Jaspreet. Your revision is going perfect. Very good. I'm happy. All right. So they say basis for opinion, they will change it to basis for disclaimer of opinion, isn't it? Basis for disclaimer of opinion on the financial statement. The auditor's report shall not include. What shall it not include? A reference to the section to the auditor's report where auditor's responsibility. Why? Because it is mentioned. We have obtained sufficient and appropriate audit evidence, but they haven't. So this is going to disappear. What else? A statement about whether the audit evidence obtained is sufficient and appropriate because no evidence has been obtained. Isn't it? Your responsibility is we are doing the audit for this period, but you are not doing any audit. You haven't done the audit. You are giving the disclaimer because we were unable to obtain sufficient and appropriate audit evidence. So this is what they are saying, that these things, these two things will not appear in the basis for disclaimer of opinion. He shall not include the following points: reference to the section of auditor's report where auditor's responsibility are described, and also a statement where the audit evidence is obtained is sufficient and appropriate. Because evidence obtained, how can it be sufficient and appropriate? Isn't it? Clear to all of you? See, read the question yourself and read the solution. I'm giving you time. See. They are saying since they have decided to disclaim, now what should be taken into consideration? Now what should be kept in mind? A reference to the section in the auditor's report where auditor's responsibility is mentioned should not be given reference to. Okay. And then again, when you say we have obtained sufficient appropriate evidence, that should not be mentioned. Why? Jaspreet, not to give reference because you did not do it. How can you sign on any report and say that we have obtained sufficient and appropriate audit evidence when you haven't obtained any evidence? You are giving a disclaimer. Jaspreet, are you understanding, beta? Yes, there is a logic to it. Okay, all right. I'm giving you time. Go through the 2 points again. See, these type of question can come in the exam. Okay, all right. Next question. NHG and Company Chartered Accountants is statutory auditor of Messrs. Backlog Private Limited for the financial year 23-24. BPL is engaging in providing telecom services and received a notice. Now, received a notice coming to your mind immediately. You know, receiving notice. Okay. So, Telecom Appellant Authority, that matter is pending for decision as at the end of the financial year. However, company has disclosed the same in the financial statement. Disclose the same. Which para should come into mind quickly, immediately? Write to me in the chat box. Audit team members have completed the audit procedures for the year 23-24 and are in process of drafting the audit report. Audit team leader knows that the matter of norms, violation and pending appeals need to be included in the audit report and seeks your guidance on how to report the matter in auditor's report. Did you understand the question? I'm giving you time to read the question. Read it again yourself. The company has disclosed the matter. Okay? The audit team knows. Very good. Very good. Very good. Immediately, EOM should come to knowledge. You know, immediately you should say 706. Essay 706, emphasis of matter paragraphs and other matter paragraphs. Immediately, okay. Let's see how the answer. Did you read the question? If all of you read the question, I'm giving you time, read it again. I'm giving you a minute's time. Please go through it once again. Because unless until you read the question yourself, you will not be able to prepare the roadmap that I'm asking you to prepare. Read it yourself. Anyone tell me any section, reference of the section of Companies Act 2013 to be mentioned here? Can any one of you? Which relates to pending litigation and its impact on the financial position and financial statements. Some section of the Companies Act which deals with proper books of accounts, adequate internal control, and whether the financial statement complies with accounting standards or not. Anyone? No? I've told you about section 143, subsection 3. Yes, yes, you have got it right. Very good. Very good. I'm very happy. Very nice revision going on. So proud of you. Very good. Okay. So let's see how answer is written. As per SA 501, if the auditor assesses a risk of material misstatement regarding litigation of claim that has been identified, or even audit procedures performed indicate and other material litigation or claims may exist, the auditor shall, in addition to the procedures required by other SAs, seek direct confirmation with the entity's external legal counsel. 501 states about that, isn't it? Litigation. Other matters, huh? Further, as per SA 706, emphasis of matter paragraph and other matter paragraph in the independent auditor's report, the auditor shall report an uncertainty relating to future outcome of exceptional litigation or regulatory action. In addition to above, the auditor's report shall also state whether the company has disclosed the impact, if any, of the pending litigation on its financial statements as per section 143(3) of the Companies Act, isn't it? All right. So in the given case, Messrs. BPL received a notice to deposit fee for violating the norms. It went into litigation and filed an appeal, which is pending for decision as at the year end of the financial year. The company has disclosed the same in the financial statement. The auditor should assess the risk, assess the pending appeal requires adjustment in the financial statement. He should also ask the company management to make necessary adjustment in the financial statement if adjustment is not made by the management. He should consider the impact on auditor's report and report accordingly, whether the adjustment is made or not, and if not made, whether he should proceed with SS 705 or not. Okay. There could be an alternative solution to it. For example, see this. They have also given an alternative solution that you mention SA 706, that is emphasis of matter paragraph, another matter paragraph in the independent auditor's report. The auditor shall report an uncertainty relating to future outcome of exceptional litigation or regulatory action under emphasis of matter para. Same. When the auditor includes an emphasis of matter para in the auditor's report, the auditor shall include the para with a separate section. Now, see, you have the liberty of answer anyways. For example, you read the question. Section 143.3 did not strike to you. SA 501 did not strike to you. You were in tune with the EOM SA 706 only. So, still you will get marks. Are you understanding? Still you will get marks. See, it is not about easy or difficult. Whatever comes to your mind that time is easy. Whatever doesn't come to your mind is difficult. Isn't it? What is easy solution and difficult solution? If you know 501 also talks about this, section 143.3 also talks about this, you will mention. But supposingly you knew but still did not click in the exam. So the institute, it marks you on the basic concept being questioned. Here, the entire focus of ICAI was to test your understanding of SA 706. If you have mentioned 501, if you have mentioned section 143.3, well and good. But if not, still you will get marks. Okay. And no marks will be deducted for not mentioning SS 501 or 143.3. Yes. But if you fail to explain 706 properly, then the marks will be deducted. Okay, so you are telling separate matter being a separate paragraph should be given. The paragraph should give a clear reference on the matter being emphasized and where a full disclosure or full description of the matter can be found in the financial statement. That is a reference, a nexture. And this para, very important, shall refer only to information presented and disclosed in the financial statements and indicate that auditor's opinion is not modified in respect of matter emphasized. This solution we have already discussed earlier. Isn't it? See, important question. Is it clear to all of you? I'm giving you time. Go through the first alternative. Understand, try to understand first alternative. That is also easy. Just read, try to go through the first point also, the first answer also. It is not difficult at all. See if you are able to understand it. Good. Others also, please see. These question and answers will be available to you. Okay, do not to worry. Okay, next question. Oval Enterprises Limited is under legal obligation to represent its current year's financial statement along with previous year's financial statement. That is the comparative financial statement. Current associate chartered accountants have been appointed as the statutory auditor for the year. Okay. CA Current noticed what? That the last year's financial statement contained an adverse opinion for the financial statement as a whole. Adverse means it was material and pervasive due to misstatement in the evaluation and disclosure of debtors. Okay. Guides CA Current for his duty regarding the treatment and addressing the issue while drafting his report. what disclosure he is required to make in this regard. Now you have to understand the question. I'm giving you 1 minute time to please go through this question again. You have to understand what is the question demanding. Read the question and then I will tell you. Read it once again yourself. See, they are saying it deals with comparative information. Okay? Comparative financial statements. And Mr. Karan, who has been appointed as the auditor, okay, he notices, means last year he was not the auditor, okay, or he was the auditor, he forgot, I don't know, okay. So he noticed that last year adverse opinion was there, okay, and since it is a comparative financial statement, means he has to comment on each financial year, each prior period. So what kind of report should he give? You tell me. Just a one-liner answer or one-word answer. What kind of report should he give? I want the answer in the chat box. What kind of report should he give? Comparative, and last year was adverse. Let me see you remember or not. One 143? What is 143? Gayatri, what do you mean by this? See, if last year was adverse, he has to modify the current period's financial statement. Do you remember this or not? This roadmap should be clear. This answer should be clear. Now you will proceed with explaining the content. Okay. See, in the given case, CA Karan noticed that last year financial statement contains an adverse opinion on the financial statement due to misstatement in the evaluation and disclosure of the debtors. Okay. Repeating the question. If the auditor's report on the prior period as previously issued include an adverse opinion and the matter which give rise to modification is unresolved, it is still unresolved, the auditor shall modify the auditor's opinion on the current period financial state. And in the basis for modification opinion para, the auditor shall either refer to both the current period's figure and corresponding figure in the description of the matter giving rise to modification with the effect or possible effect of the matter on current period as well, because it is material. That is why adverse opinion was given. See, last year debtors not corrected, the opening stock of the debtors will come out to be falsy. It will be materially misstated. Again, material misstatement recurring. Carry forward now. So again, modification. In other case, explain that the audit opinion has been modified because of the possible effects of the unresolved matter on the comparability of the current period figure and the corresponding figure. Further, when comparative financial statements are presented, the auditor's opinion shall refer to each period, this we all know, for which financial statement are presented on which an audit opinion is expressed. If the financial statement of the prior period were audited by the predecessor auditor, means some other auditor, in addition to expressing an opinion on the current period financial statement, he shall also give the OM para. What is other matter paragraph? He will mention that the previous year financial statement was audited by a predecessor auditor. The type of opinion expressed by the predecessor auditor, that is modified opinion. And opinion, if the opinion was modified, the reason. Why was it modified? So in this case, he will say it was adverse opinion. Why? Because of evaluation and disclosure of debtors. Okay. And the date of that report, date of the previous year's report. Do you remember this content we have already done while doing the chapter? I'm giving you another time to read this. Read this answer. See, we all know we will refer to both the financial statement. Why? Because comparative, isn't it? Modification in the current, in the previous year will lead to modification in the current year. Okay, since it was if it was audited by a predecessor auditor, he will also, in addition to modification, give the OM matter paragraph, that is other matter paragraph, stating that it was audited by the previous year financial statements were audited by predecessor auditor. Okay, that the type of opinion was modified and the reason for the same, and also the date of the previous year's audit report. Is it clear to all of you? Please write to me in the chat box. Is the answer clear to all of you? All right. Let us proceed. Messrs PQ Limited has a turnover of 807 CR during the financial year 23-24. It has outstanding dues towards goods and service tax. Oh ho ho, statutory dues. 10 lakhs since June 23. When inquired by the auditor, the company's management informed him that they have filed an objection letter for the said demand with GST authorities. However, no response is received from the GST department. State the reporting responsibility. So kind of the question again. To tell the clause number 7. I told you how to remember 7. S for 7, S for statutory dues. This is how I made you remember. S for 7, S for statutory dues. Isn't it? Those who have done my class will be able to recall. If you do not remember, remember now. Okay. So what is the question about? Are you able to understand? It is with regard to the pending statutory dues. So you have to tell what was the extent of the arrear outstanding, whether it is outstanding for more than 6 months or not. Okay. And also if there is any dispute and you haven't uh, submitted the deposited the undisputed amount, then the amount involved and the forum involved. This is what you have to remember here, isn't it? If it is not deposited, okay, and if it is disputed, you have to mention the amount and the forum involved. Under which forum, what court under it is under the district court or high court or supreme court, what forum is it? All right, read the question again, read it yourself. GST dues not paid. Okay, and when the demand was raised, they have responded. They have written the letter to the GST department, but for that letter, no response was received. So you have to tell, isn't it, disputed and undisputed, and you have to also mention that mere representation to the department shall not be treated as dispute. But here they have made the appeal. They have written the letter, isn't it? All right. So reporting responsibility of auditor under para 3 of CARO 2020 with regard to clause number 7. Okay. So the auditor is required to report as per clause 7A of para 3 of CARO 2020. That whether, because they are part A and B, isn't it? A deals with the amount outstanding, statutory dues outstanding for more than 6 months from the date they have been become paid. They were payable. Huh? And B talks about the deposit amount and the dispute, then the forum and the amount involved. There were two parts to clause 7. Do you remember? Okay. So here they say whether the company is regular in depositing the undisputed statutory dues including the GST, PF, ESI, income tax, sales tax, service tax, custom duty, excise duty, VAT, cess and other statutory dues. Why are these statutory? Because they have deposited with the government, isn't it? All right. All right. To the appropriate authorities. And they are undisputed statutory dues. If not paid, then the extent of arrears. Arrear, you understand? How much pending, isn't it? Arrears of outstanding statutory dues as on the last day of the financial year concerned for the period more than 6 months from the date they become payable. If it is less than 6 months, no issue. But reporting is required only if it is becoming payable for more than 6 months from the date they became payable. If it is outstanding for more than 6 months. Less than 6 months, reporting not required. Okay. So it shall be indicated, it shall be reported. Further, the auditor is also required to report as per clause 7b of para 3 of CARO 2020, where statutory dues referred to in subclause A have been deposited on account of any dispute. Then the amount involved and the forum where the dispute is pending has to be mentioned. And do not fail to mention a mere representation to the concerned department shall not be treated as a dispute. Clear? 7a talking of any undisputed mentioned in A, disputed mentioned in part B. Isn't it? 7a talks of undisputed statutory dues. Deposited or not? Not deposited? Mention what it is outstanding at the last day of the year. If it is for a period of outstanding for a period of more than 6 months from the date they became payable. Okay. B, they have not been deposited and there was a dispute, then the amount involved, forum at which it is pending, and also a mere representation does not lead cannot be treated as dispute. Clear to all of you? Is this question clear? Please write to me in the chat box. Do you want to see the solution once again? Please see. Others also, please see the answer. I'm giving you time. Have you all seen? Should we proceed to the next question? Write to me in the chat box, please. All right. CA Ayush has recently qualified and joined a CA firm. On going through various audit reports, he observed that different phrases were used to express an unmodified opinion on the financial statements. On inquiring with the senior, he got to know that all those phrases can be regarded as being equivalent. Which phrases are appropriate and which phrases are inappropriate while drafting an unmodified opinion? All right. Very, very to the point question, an important one also, isn't it? Because you know, when do we use the word present fairly in all material respect and give a true and fair view, isn't it? So they can be used interchangeably, isn't it? Let's see. Appropriate and inappropriate. Then inappropriate also you have to tell. You cannot write subject to. You cannot write with the foregoing explanation. Isn't it? You cannot give those things. That becomes a conditional opinion. Thereby, it weakens your modification. Isn't it? It weakens the audit report. Isn't it? It doesn't give that weight to it because you are using subject to with the foregoing explanation means the auditor is himself in a doubt. Isn't it? All right. So, appropriate and inappropriate phrases while drafting the unmodified opinion. Did you understand the question, dear students? They are just asking what phrases, there are two parts to it. What phrases can be used interchangeably and what are inappropriate phrases, what you should not use. Okay. So, when expressing an unmodified, specifically for the unmodified they have asked on financial statement, the auditor's opinion shall, unless otherwise required by law or regulation, use one of the following phrases which are regarded being equivalent, means either of the two. In our opinion, the accompanying financial statement present fairly in all material respect in accordance with AFRF. What did I say? Present fairly in all material respect. Okay? Second, in our opinion, the accompanying financial statement give true and fair view. Okay? In accordance with applicable financial statement. So either you write give true and fair view or present fairly in all material respect. Repeat with me. Present fairly in all material respect and give a true and fair view. Okay. The phrases present fairly in all material respect and give true and fair view are regarded as being equivalent. This you have to write in inverted commas. Okay. Present fairly in all material respect and give true and fair view. Now comes the second point. Inappropriate phrases. What are inappropriate phrases? When the auditor expresses an unmodified opinion, it is not unmodified means you are saying everything is okay. You are giving a reasonable assurance. You're giving a high level of assurance. Okay, that the financial statements are true and fair. So, when the auditor expresses an unmodified, it is not appropriate to use the phrases such as with the foregoing explanation. Means you are writing the financial statements are true and fair. They reflect a true picture with the foregoing explanation. Again, why explanation needed if they are true and fair? Are you understanding? The financial statements are true and fair, subject to confirmation from debtors. Subject to this. No, it is absolutely wrong. Is it okay? In relation to the opinion, as these suggest what a conditional opinion. Your opinion is conditional or a weakening or modification of opinion. If you are giving subject to means there is a modification. Could be qualified opinion. Isn't it? Foregoing explanation could be qualified. Means you are saying that there is a misstatement which could be material but not pervasive. Gayatri saying, super clear, your explanation are getting into my mind and ready for the exam. Good. Very, very good, Gayatri. This is what revisionary classes are for. That things settle down into your brain again and again. And you see, you assess. Okay. All right. So again, look at this question and see to the answer yourself. Two parts to the question. One, what are the phrases that can be used interchangeably? So you know, present fairly non-material respect and true and fair. Give a true and fair view. What not to use? With the foregoing explanation and subject to. If you are using this, means it is it is not a modified opinion. It is not an unmodified opinion. You are saying everything is true and fair, subject to confirmation from debtors, subject to valuation of fixed assets, subject to valuation of inventory. Oh no, that is a modification. Could be a disclaimer, could be an adverse opinion, could be a qualified opinion. Are you understanding this, dear students? So this was the last question for the day. And one which we had skipped, I would like you all to see to it that it was nothing but a repeated question. I think I have made you done that also. Yeah. Now, what was it? No, we have done it. We did not leave that. This was the one, I guess. Isn't it? Isn't it? This was the one. See, qualified adverse disclaimer. All right. Now, the ball in your court. Your doubts, your queries, or any of the things that were unclear to you, any of the matters or any of the questions that were unresolved. Thank you, ma'am. So much from last 4 years. I'm trying to clear audit, but not able to clear. But this time, after preparing from ICAI classes, I'm 100% sure that I will definitely crack this time to become CA finalist. Definitely, just breathe. Definitely, you will qualify. Just trust yourself, have faith in God, and keep doing your work. You have to keep revising, you have to be dedicated, you have to seriously attempt all the questions, you have to really be serious about the concepts. And if done, and I could see your preparation is very, very good, nothing to worry at all. Just be calm, let bygones be bygones. All the failures gone for a toss. Now you are prepared. Isn't it? You are prepared. Do not keep anything in your mind, the backlog. Clear. You are going to bang the exams with full swing and you're going to come out with flying colors. Okay? And do share your marks with us. That gives us real pleasure. All right. With this, Time to say good night and goodbye to all of you. Thank you so much for being so wonderful students. And till we meet next, good night, take care, and God bless you all. Technical team, thank you so much. Yes, time to say goodbye and good night to all of you.